Good morning, folks. My name is David Brear, and welcome to episode 15 of Fintech Insider Breakfast Show, a show from the folks from 11FS, bringing you the breaking news from around the fintech and banking landscape every single weekday at 8:30 BST. As we are going to all be cooped up for the next couple of months, we thought we'd try and give you guys something to start your days off just a little bit brighter. The show's a bit of a mix of people from 11FS's family as well as the extended family, and definitely today, as somebody in the extended family of 11FS, I have the pleasure all the way from Oslo in Norway of introducing Mr. Lawrence Wintermeyer, who is the co-founder and principal at Ellipsis. How's it going, Lawrence?
Well, what a pleasure to be speaking to you in these unprecedented times, and to be considered an extended member of the family. So, notwithstanding the unfortunate human tragedy that's unfolding, we're managing to bear up quite well in Ellipsis and in the Wintermeyer family.
It's strange times. I mean, we obviously, for anybody who knows, 11FS do lots of bits and pieces with people in Norway, particularly with DNB, and it looks like the market and share prices and actually just in terms of cases, is Norway seems particularly heavily hit, as you would sort of no doubt know. But it's a strange one, isn't it? I mean, when you're sort of stuck in your house, I guess what's happening outside of the four walls of your place, it doesn't quite exist other than on TV at this stage, does it?
Well, I mean, we're a remote working family team, as you know, David. Norwegians are early adopters, so the media we get and the data we get is quite extraordinary. But what I would say is that globally we've got an issue where we see this health crisis unfolding that is creating a crisis in the financial markets and a human crisis. So equity markets have drawn down, 30-some% all around the world, not just in Norway. I think the thing I would point out, particularly about Norway, I commute to London every week. Well, I haven't commuted for 3 weeks. I've been in lockdown and in self-quarantine. I got back from my final conference commitments on the 10th of March. I had to go into self-quarantine with the family, but everything was locked down, I think, from the 11th. I think the situation is under control. But yes, most certainly, we have had our share pro rata of coronavirus contagion, and the total death number, thankfully, is a bit low. But again, we're paying our respect. The Italian Spaniard, now watching at what is unfolding tragically in the U.S.
Yeah, it's really difficult. I mean, just on the stream, we've got people from all around the world sort of joining into this as well. So good morning, everybody who's joining in. Thank you so much for taking the time with us this morning. People from Raul, again, from India. Dude, you're here every morning. Thank you much for joining in. John Moss over in Sydney. We've got Alberta in apparently a very grey northern London right now. Chris Skinner's joined in as well this morning. Hey, Chris, thanks for joining in. We've got people on here from Paris and France and Edinburgh, all over the world. I mean, for anybody who doesn't know, Lawrence, give us a bit about your background and what sort of led you up to Ellipsis, and then give us a bit of an overview of what you do at Ellipsis as well.
Well, sure. I mean, the first thing and the most important thing is I'm a husband and I'm a dad. Boy, I've been on service on both counts for the past 3 weeks. Mrs. W and I are both working from home. She works for a fast-moving consumer goods company, so is really on crisis calls all the time. And we're homeschooling our 9-year-old daughter. Secondly, I'm a principal in Ellipsis. I sit on a number of boards, and I also co-chair a digital assets investment association called Global Digital Finance with your colleague Simon Taylor. We founded it a couple of years ago, and I've been spending a huge amount of time with that. And then lastly, in my community life, I do a lot of work for foundations and not-for-profits, and particularly for a grassroots foundation I belong to that is focused on early childhood development in South Africa. But Ellipsis, for the most part, is really a private venture portfolio company. Our big play, which is focused on an industrial investment platform with sustainable investments, particularly for private clients, is fine, but it's difficult working in some instances with private clients who aren't used to working remotely. I think in global digital finance, which is a global networked organization of hundreds of members from across the world and hundreds of individual contributors to technical standards, we fared very well. But what I would say is that it's difficult to escape what's going on in the macro markets, and with the with the social, again, really the human tragedy of what is unfolding. So I think it's early doors.
Yeah, I mean, it is a people are scrambling, I think, in this first phase just to retain as much sort of normality as they can do within their business, aren't they? And making sure that actually there is a business in the first instance. But I guess for those organizations that move beyond this, I mean, remote working is one thing, but what about sort of remote fundraising? Like, how do you see that sort of working out in the market? It's quite a significant step for a lot of people to be able to do those things, isn't it?
Yeah, I mean, a few weeks back, again, we've been tracking COVID. GDF and a big chunk of my community were at Davos. Davos is overrun these days by the global digital community from the West Coast through around the world on the promenade. And when World Mobile Congress canceled, we knew that this was going to be big. Again, from early February, we've had our Asian colleagues in Hong Kong and Singapore remote working. We've had to cancel trips with folks from China, and we've sort of been on top of this. And so in looking at particularly the impact of contagion, the mathematical impact of contagion before this stuff broke, and my own narrative has been all around, look, if we're shutting things down and the government is asking, businesses, right, individual consumers to lay down tools, most of us are going to be out of work. And where are we going to get our funding, whether we're a fintech startup or any startup or just the average consumer. And so thankfully, we've seen governments respond to that in both fiscal and policy stimulus, but there's a long way to go. We're in a forbearance system where the money you owe to somebody is going to get used for something else. They're expecting it, and it just can't stop. So this whole focus on remote funding was really a prod to governments to say, boy, we're going to have to carry a pretty big load here, and capitalism, Western capitalism, is going to be underwritten by governments for the coming months.
Definitely. I think, like I say, in both of these phases, right? Actually, with all of the stimulus sort of packages that are kind of working to sort of keep people in jobs around the globe, different governments have taken slightly different approaches on that, but and have sort of added different groups into that mix, haven't they? From individuals with jobs to businesses with packages. But I mean, what do you expect to see after this, Lawrence? Because obviously, probably the first impact with Corona is just probably the small bump, really, isn't it? I mean, there's going to be a lot more impact on from a death perspective, but from a business perspective, the sort of fallout, the financial fallout in the second wave of this, which is inevitably going to dwarf, I guess, anything else that we've sort of seen. I think that's probably where government's going to have to step in, probably more than ever, right?
Yeah, and again, frankly, it's difficult to have a rational discussion about this because quite often I think rational analysts sound alarmist. And so one of the most important charts for me was the 1918 pandemic flu chart, which has got three very large surges, of which we think we're in the second bit of the curve now when people are talking about flattening the curve. But I don't think in this generation, through financial crisis and the many financial crises many of us have been through or traded through, we've got this practical issue of just telling people to stay at home and stopping the economy. I mean, the most important thing about this is, look, the government is asking us all to stay at home. I think we all go along with those measures, but we have obligations. We've got rent to pay, food to buy, mortgages to pay. We have creditors to pay, and how is that going to work? Are we going to have to start dipping into our own savings, which is probably a pretty short runway for most people? We're going to be dipping into our pensions to support ourselves and families. So I think this is a pretty complex issue. And, we're at a stage where it's too early to tell, Dave, but the governments basically have said they're going to print money, which from my perspective starts to say, well, how long can governments go along guaranteeing citizens and businesses through this crisis? And it's all unfolding, but I do believe that the practical consequences are they're pretty terrible, really. And I think we're all trying to not just come to terms with them, but trying to help governments in the system, the communities, to overcome these challenges we're facing.
Yeah, it does. You always, unfortunately, I think you always measure people's reaction to things. We break it down to the lowest common denominator, right? And actually, the government has very much put their their hands in their pockets to try and solve this problem. I think it becomes almost a point of, can they really get the money out there quick enough and distribute it quick enough to save jobs and save businesses, isn't it? Some interesting sort of comments kind of coming up. So Christian, from who's an advisor at Schroders, said, given the delay in the financial services due to the supply side nature of it, how will the new banks and asset managers be impacted in the future? I'm not sure if you've got a view on that, Lawrence.
Well, again, how will new banks? One, you need to survive. We are in survival mode here. Big balance sheets survive. Schroders analysts will know that if you were paying attention to the markets from the middle of February, large U.S. corporates were starting to draw down cash lines of credit. Cash was king, particularly in the first couple of weeks of March, when the news hit, of coronavirus and COVID-19 hit the markets. Cash was king. Safe harbor assets, even gold, Bitcoin, pulled back a bit. And so, number one, whatever exemptions you're getting, from the government, whatever support you're getting, do you have a strong enough balance sheet to weather what's going on? And I think the complexity in that is, do you understand where your retail wholesale market, where the impact is clients? I think if you can get through that, typically through any complex cycle, the winners are the ones that have, are most agile, have the least problems with heritage and the negative side of heritage in either the cost base or the inagility. And typically this is a time for really new business models and new technologies to really emerge. They typically come out in very large crises like this. So again, I think it's a game of patience. We need to wait and see, but I think it's difficult to work out how you're going to be positioned unless you've got a big balance sheet or deep pockets right now.
Yeah, I use the analogy when I talk to everybody at 11FS that it's essentially this is a winter right now, and we have sort of no idea how long the winter will last, which is the sad thing. But and the people who are probably going to do best in this time are the ones who have got as much grain in the barn as they need, but you've no idea how much you will need. So it is a worrying view, as you say, both from an individual perspective. People just don't have a lot of savings. But actually, businesses don't have a lot of cash runway, do they? So it's why we're seeing so many things grinding to a halt so quickly. Is the whole machine, the whole of the economy was set up for growth and progression and movement. And actually, we're in a world where people are trying to really understand what happens next. There's an interesting question on the comments here from Dan. How do we navigate millennials through their first recession? Because this actually might be the first taste of this. They're probably chapter and verse very well used to very, very low interest rates for a very long period of time / their entire life. But for many people, I guess this is the first taste of a major downturn, given they probably weren't at adulthood in 2008, right?
Well, again, yes, and indeed, and it's a health crisis, then creating a financial crisis, and all of these problems. So, I think David, for most of us on the call, we've been in an environment of low interest rates since the 90s, for the most part, in the West. But I think, as with anyone else going through a crisis, you need to look after yourself. How are you going to meet your own obligations? You need to look after your family. You need to look after your community. You need to be able to look after yourself. And the point I think you were making about the government stepping in, I think we're all delighted to see some of the initial responses. But the biggest issue is how quickly or agile governments can get money to people. And I think whether you're talking about the UK and small businesses, or the US right down to the individual citizens and cutting checks for people, it takes too long. Things have stopped, and we really need to work on that right now.
Well, and to your point, the very physical nature of even the distribution channels in most of these things. We've talked about it a lot on the show this week, but actually, the first advice for any businesses was to walk into your branch to talk to your branch manager about one of your the government loans. And obviously, in this environment, it's not practical. You mentioned the US. Actually, a lot of the distribution of funds still goes to a check. And actually, even then, we're talking about, 20 between 14 and 20% of the population in various different places around the world who just don't even have bank accounts. So, this is a financial sort of pandemic as much as it's going to be a literal one. So, last time we sort of had any scale of like London shutting down, you actually wrote some really great pieces talking about sustainable finance. It feels like, given where we are and given the opportunity to really rethink a lot of the things that have been put in place, like now might be a really amazing time for people to sort of step back up again to think about the sustainability of all of their models, right?
Well, I think that's a great point, David. And just to, a couple of things, just to follow on the conversation, even just about liquidity capital. The biggest store of capital is in private equity, where I can't even remember the size of it, but it's massively huge, and certainly must be close to $1 trillion of dry powder on the sidelines. And that was in a bull market where arguably there was quite a bit of choice, but it couldn't find yield. So there is money to be deployed, and some of that's starting to make its way into benevolent hands. But to this point of one of the things I find always outstanding in this environment. If we're saluting our health workers, and most of our health workers that are on the front line were concerned about their own protection and contracting basically a disease that has a fatality rate and a demography that we don't understand. The human spirit of the number of people volunteering to support the NHS in the UK, which was over 700K the last time I looked at it. Companies and acts of doing good. Hotels now in New York and London opening up to medical staff, and shops providing food, free delivery, clothes to medical staff, I think is sort of extraordinary. And so we can see the human crack of light come through things. I think if you are in a position where you have the opportunity and time to think about these things, in my own community and coming out of MIT, everyone is really focused on how we can take the learning that we're going through right now with remote working, and really help foster a better digitally led, decentralized society where we just don't have the reliance on these central common systems. And again, I'm not dogmatic about it, but you and I are sitting here because somewhere in the system something failed to tell us something was going contagion. And I don't think it's healthy to say, well, we could have done, and what didn't we do? We are where we are. But this sort of thing is going to be an alert to people. And it's certainly an alert as to what role and how we play our role in the economy and society. So there's a lot of thinking going on in that front. And I hope to see some bright lights peek through those cracks.
Yeah, no, I agree. It is interesting, like you say, it has taken this scale of a push for us to realize that actually we have the ability to do the things in the way that we could have done a lot before. It's been, I've said a few times this week already, so for anybody, apologies for repeating myself, but we've had banks do more in remote working in the last 3 months than actually like the preceding 15 years. So, I mean, it's interesting to see what happens and how they use this really as the catalyst for sort of really significant change, because arguably when we're talking about distribution of funds, we're talking about, you know, capital hold in terms of their ability to sort of call on funds. Then actually there's things all the way through the system of financial services that really adopting digital in the way that actually people have been talking about for such a long time, but actually they haven't had the need to, would have protected their organizations so much heavier now from actually all of the problems that we're seeing. So, I mean, do you think that this will be used as a catalyst for change from the really big organizations? Because the inhibitors are seemingly sort of dropping away, aren't they?
Well, you know, again, if we get back to the sustainable point, you know, David, I've been huge on particular sustains, and quite often they're referred to as ESG, environmental social governance. And well, what is it? If we put aside the crisis for a second, you know, it's broadly the view that our markets have changed from companies or stocks listed that had, you know, physical assets and plants and machinery to balance sheets that have got a lot of intangibles on it. And so it's non-financial measures that are as important as financial measures, but we've got both an economic system and a system of production that's still measuring things from a previous era of manufacturing or of industry. And so we've got a huge misalignment, and that comes through in carbon, you know, carbon and fuel. Oil companies, coal, you know, the carbon footprint from your airline. Carbon footprints really is probably the poster child for that. But it's much bigger than that. It isn't just about the physical resources in the environment, and you know, it's about how we use water, how we use forests. Plastic has obviously become big over the past few years and what we do with plastic. But when you get onto social measures, and I know, Dave, you're a big supporter of this, you know, for people who can invest, and many of us who are in jobs that have pensions, even defined contribution pension schemes, have an option to invest. Many of us have nest eggs. The UK is the second biggest retail investment management market in the world, next to the US. You have a choice. You know, do you want to be investing in companies that you know, do not treat you poor? You know, the Norwegian fund did not invest in US companies because of labor practices, and they were on the prohibition list. And I think that sort of leadership is important. Do you want to invest in companies that are creating products that generate significant waste or aren't environmentally friendly? Do you want to invest in companies that don't have a diversity of staff, not just you know, focusing on gender diversity, but race diversity, and are equipped to deliver products and services? And so I think that most of that activity is going on in private markets. It's going on in big companies. It may seem slow to people. Banks quite often are at the tail end of catching up with some of this stuff, but like to window dress themselves and think, hey, we're doing things, but they're certainly trying from my perspective. So I think these sort of black swan events, and this one, which is driven by human crisis, more of the market cycle, or accelerate the positive things we're speaking about than ever before.
Yeah, I completely agree. I mean, a lot of comments on LinkedIn now saying completely agree, we're using absolutely the wrong data and metrics to measure our progress. And I think that's very, very true, Lawrence. It feels like a lot of people are probably only waking up to this now, or have been doing it like it's a fashion statement rather than sort of anything else, which is quite sad. So, I mean, a big part of that, and the progression on that, you know, people actually having transparency of data to make those decisions is really, really important. But I mean, a big part of your role now at Elipses, and actually everything, you know, I first met you at Innovate Finance, and actually everything you were doing with Innovate Finance is actually how you continue to sort of create that advocacy in terms of getting government parties or people sort of motivated at scale to make these types of changes. Do you think, again, I guess, it feels like this is a catalyst for showing the things that, because, you know, I've heard you say this many times before, and I don't get bored of hearing you saying it, but we're in a point now where we can use this as the catalyst for people to really drive this type of change. But that has to keep starting with government, surely, because I guess big organizations are only really going to ever do something they're told to from a government perspective, or something that they have to do because the consumer stops buying their product if they don't do it. So there's power on both sides of that equation, I guess. And how would you suggest right now that we all as individuals do our part?
Well, I think that's a good question, David. And again, just to try to link this point about governments and how they respond to things. I mean, it appears to me, and many people have written about this, that most of the economic measures that governments look at are irrelevant given the marginal cost of utility. And this call that you and I are doing are zero. And we don't even measure the productivity of all of the tools that digital, which is the marginal cost of productivity down to zero. So there's a cognitive dissonance in the government and in Western governments, well, governments around the world, but certainly Western governments, who generally get outfoxed by at least 150 global companies that are all bigger than most governments outside of the US and China. And then, you popped a great piece today about, first aid workers or first carers. And if you've ever done first aid and you've been on the scene of a tragedy, I love this. You pop this week. First aid carers do not go to people that scream the loudest. They go to people that are the most quiet, because typically that's where the damage is. And that's a great analog to turn on governments right now, because governments typically are talking a lot, but listen to people who speak the loudest. And that's the way advocacy works quite often. So I think at this stage, we need to speak loud, collective. We need to get as many participants from the industry together, professionals, and really do more than nudge, camp out and say, hey, look, how are we going to get money to people faster? And there is a quality compromise, but I'll tell you, I'm watching CNN looking at the single form that they've got in the US for small business funding. And the conclusion is it's so easy to fill that most people are going to gain, or many people are going to gain the system. There's going to be probably a lot of credit risk in it, which I'm assuming the government is going to have to underwrite anyway. And, I think at times like this, that's going to happen. So you need to factor in the standard distribution of credit risk, fraud, all of the things, the normal distribution of behavior try to move out of the system. You just need to let some of that in, but in a controlled way, because it's going to happen, and not stop that, from getting to the first aid to people. There's a lot of stuff that's going to go on, but focus on the 80-20 rather than the 20, which is typically where the control system is focused.
Yeah. I mean, it's difficult at the moment, isn't it? I think the government are slightly in the situation. It feels a little bit like when you see the pictures of, planes flying over Africa, throwing food packets out of the window. It feels that unprecise who's kind of getting the money and who's getting the aid, and they definitely don't need to lose themselves completely in terms of approaches to risk and everything that sort of goes with it. But I think that's probably, I mean, we're coming to the top of the hour. I mean, I should say to everybody, on my 4 years of running 11FS, some of my fondest memories was hanging out with you, Lawrence, when you were at Innovate Finance and we were in level 39. For anybody who doesn't know, we were both in the same office up in level 39, and I'd say at least every other day we completely put the world to rights. So if you imagine the unedited version of this where we really let go, then it really was entertaining and kept me sane. So thank you so much for your advice and so much for keeping me sane, Lawrence. I appreciate it.
Oh, hey, always a pleasure, David. Thanks for having me on.
No worries. All right. Well, we're coming to the top of the hour, guys. We really should get on and get the day going. So, Lawrence, thank you so much for joining us. Where can people find out more about you and Ellipsis?
Independent voice, Google, Wintermeyer, and Forbes. You can find Ellipses with one L, ELIPSES.co, and Lawrence at ellipses.co, and you can find out about GDF at gdf.io. and Lawrence at gdf.io.
Fantastic. Well, lots and lots and lots of love for you in the comments today, Lawrence. So go and check out all of that stuff. All right, guys, thank you so much. All we have for you today. Have a great day, everybody. Stay safe, and we will see you on Monday. Thank you very much. Goodbye.
Thank you.